Hello, everyone. Thanks for joining us on this Wednesday, and welcome to this educational presentation where today I want to talk to you about 3 powerful ways to trade. These are pretty much the top of our methods and strategies, and they can really help you gain that consistency that you're looking for in any market and in any time frame. Now, let me share with you an example just of one of these ways to trade. Let's check out this chart here in Costco. Okay, as we can see, we're just looking at a very minimal amount of bars here. Most traders would say there's no way you can get any idea just from looking at these. But one of these methods actually would have generated an uptrend just based off these 3 or 4 bars. And you could have taken advantage of this large move. Now, you could have applied any technique or any strategy, it doesn't have to be one of mine, can be someone else's or one of yours, to this uptrend, but you were in sync with the trend. Now, when the trend started to falter and go sideways, a lot of traders say, well, this is my chance to get in. I missed that big move. I'm going to buy at a lower level. I'm going to buy on the pullback. I'm going to get in at a much better price. But the same method actually would have generated a downtrend based off the last 3 bars. And so you could have either taken advantage of that by going short, or you could have sidestepped it entirely and missed all of the downward move. So this is just one of the methods I'll be talking about in 3 powerful ways to trade. And the good news is that all 3 of these ways can be easily accessed on the PTS Primo charting platform. I developed this with Pro Trader Strategies that makes trading simple, and it teaches you all of these numerous edges and ways to trade with one-click access. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. If you're new to my webinars, we're all about one thing, and that is simply educating you as traders. I know a lot of people come to our webinars thinking, well, what's he going to say about the market? Does he think it's going to go up or go straight down? Or is there going to be something happening in a particular time frame or particular stock? Remember, that's up for you to decide. Our goal as an educator is simply to provide you with the tools and techniques and the trading methods so that you can ultimately make your own trading decisions and be in charge of your own trading destiny. I've been trading for 45 years, and the only traders that are still continually trading are the ones that make their own trading decisions. So that's the service we provide, giving you the information so that you can really feel in control of your own trading destiny. You'll see that in today's educational class. Now, before we begin, once again, please take a look at our disclaimer. We're required to share this with you. I'm going to show you a lot of performance results using these 3 methods, these three ways of trading. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Another way to get education on a daily basis is to follow us on Twitter. I would recommend copying down our handle right there, abbreviation for Specialist Trading, because every day I post upwards of 5 or 6 different snapshots of signals or techniques that our methods have generated. Also, little bits of financial wisdom. So there's lots of great free education on a daily basis. All you have to do is follow us on Twitter. So as I stated in the beginning of the presentation, we are different from other webinars you may have attended, and that our only goal is simply to educate you. We are first and foremost educators, and you're going to see that in today's presentation, because education is the key. Remember, that gives you the opportunity to make your own decisions. Most of you or have been taught the way I was taught some 4 decades ago, where that we have to listen to someone or something else tell them what to do. Obviously, we're taught to go to trading rooms or chat rooms or wait for the guy on TV to say what he likes about the market, or in some blog, or even wait for indicators to cross or some guy to say something about earnings reports or economic reports. That's how we usually are taught to make our decisions. But roughly 85 to 90% of all traders fail based on that premise. So obviously that does not work. There's no consistency in following someone or something else. What you have to do is be provided with the information that has stood the test of time so that you can make your own trading decisions. As it says right here, my goal is to teach you how to trade with a specialist edge, because a good mentor does not trade for you. He teaches you how to trade. And that's the same way I was taught, and hopefully it will be instilled in you. You'll see that attention to education in today's classroom, okay? Now, a few things before we begin. As always, remember this is a static Zoom presentation. It is not interactive, so please remember to disable all cameras and all microphones. We're not going to have an interactive presentation here. This is just simply a PowerPoint presentation. Now, if you have to leave early or if you're having technical issues, don't worry. Each and every one of you will be sent a link to this recording. We're recording this so you can watch it at your own leisure whenever you'd like, okay? And lastly, please ask me as many questions as you'd like, but wait till the end of the presentation, okay? We have a number of slides here to go through today, and I don't want to stop for each slide. We'll be here far too long, so please wait till the end of class. I promise I'll get to each and every one of your questions, okay? All right, with that stated, let's begin today's educational presentation. Let's jump right into it. Remember, we're talking about 3 powerful ways to trade. Now, these are actually 3 different methods, okay? These are 3 different specific methods. These are the top of our methods at Specialist Trading and Pro Trader Strategies. So let's jump into it. Method number 1 is something you've heard me talk about before in an individual class, and that is the PET-D, okay? The PET-D is something I was introduced to some 4 decades ago on the floor of the Pacific Stock Exchange when I was working on the floor, on the trading floor. Now, at that time, we used to call it the formula because it was a specific formula you had to calculate by hand in order to come up with its results. But we've made it easy. So if you're not familiar with what the PET-D is, it's a proprietary algorithm. We're keeping the formula in-house, and that's mainly to save you from a lot of cumbersome work and using your calculator, your hand calculator, and trying to calculate everything on a tick-by-tick basis. So we've formatted the PET-D into a color bar tool, okay? It's either going to color any bar, any market, any time frame, either green or red. Now, the way we're going to use it in this capacity, the simplest way, what we're going to show you today, is as a short-term trend identifier. This is one of the simplest ways to apply it, but probably one of the most powerful ways, okay? So let's look at a few examples here. Here's an example in Bank of America. As we look at the 3 bars here, most people, myself included, if I wasn't aware of the PET-D, would say, how can I make a decision based off that? I don't know if it's going to go down or up. I don't have any information or enough information to really give me that kind of decision-making process. But with the PET-D, it's simple. All you have to do is click on the PET-D on our platform, and the colors automatically will be changing. Once again, either to green or red. As we see here, we have 3 red. What that tells us is there are consecutive bars painted the same color. Now you notice the last bar is an up day, okay? So these first 2 bars are down, and most people looking at conventional charts would say, what's an up day, Steve? Shouldn't it be green? No, because this is really the traditional way of looking at candlesticks. They're hollow, and you have the background white, which tells you that it's an up day, but the outline of the bar is red. So what this means and tells us is that it's a down, or I should say it's an up day in a downward trending market. So all we need are 3 to 5 bars to tell us that if they're consecutive colors to tell us what the trend is. And as we can see, look what happened to Bank of America after that, okay? Now, later on, the bars change color. Now we have 3 green. So this is telling us that, well, most likely we'll be heading higher. Now the PET-D does not predict how high, doesn't tell the intensity. It's just identifying on a tick-by-tick basis and translating what the market wants to do. So as we see here, market went up, not really strongly, but it still went up until this happened. Now we're met with 3 more consecutive red bars. Now you're saying to yourself, well, you know what? This is not a pullback. This is not something that I want to be involved in anymore. Maybe I should get out, and look what happened, okay? So you see how this is such a powerful tool, how it can help you. And the beauty is there's nothing you have to calculate the way I did when I was trading on the floor. It's right there with you. Everything is 1 click away on our platform. Remember, we're looking for either a series of red bars to tell us that a short-term downtrend is in place, or a series of green bars to tell us a short-term uptrend is in place. You can apply any method, any strategy, as long as you're in sync with that direction. And this will, we feel, greatly increase your odds for consistency. So let's look at some recent examples and see how this could have helped you as a trader. All right, we're looking at that chart we looked at before in Costco, right? Once again, we're only looking at roughly 4 bars. How can we determine what this is going to do? By simply applying the PET-D. Click it on our platform, just click on PET-D and the colors appear. So we have a series of green bars. What's that telling you? It's telling you that the market right now wants to go higher, all right? So therefore, you can apply any strategy as long as it's in sync with the PET-D. If it's one of yours, you have to look for a buy signal. If your strategy gives you a sell signal and the PET-D is green, most likely it's not going to be a very profitable trade. You want to be in sync with what the PET-D is showing. And look what happened. If we're in an uptrend right here, if it's signaling an uptrend, wouldn't have paid to look for only buy signals of whatever method you want to trade, okay? Now look what happened after that. The market went up, had a really nice rally, and then it started to falter, and now we have 3 consecutive red bars. So what is the market telling you? Not me, not some guy in a chat room, not some guy on TV, but what is the market? That's the source of what we're trading. What is it telling us? It's telling us it wants to go lower. Most likely we are in the beginning of a downtrend. So if your strategy or someone else's strategy or some guy in a chat room says to buy, most likely that trade will not work out. The odds are against it working out. So at this time, if you're long, most likely you should be getting out of the trade. Or if you're a more aggressive trader, you should be looking for something to short, maybe buy some puts, because look what happened. Okay, see how the PET-D could have helped you tremendously there. Here's another example. I know a lot of traders, a lot of our students like to day trade stocks. Here's a 2-hour chart of Apple, okay, just in the last couple of weeks. Now, hard to see what's going on here, but once we apply the PET-D, we see that all the bars have been red. So we've been in a downtrend, and we knew well in advance, right up here, that we were going lower. But then look what happened. Once we apply the PET-D, we have a series of green bars. So the PET-D is translating to us that most likely the downtrend is over on a 2-hour time frame, time to go long. Now, remember, the PET-D is not a strategy. It's not a system. Just because you have a series of green bars, it doesn't just say automatically buy at the market. You need to have structure in the form of a strategy or a technique. The beauty is you can use any strategy you like, and it'll greatly increase your odds for success, in our opinion. So you could have, whatever method or technique you'd like to use, look to go long and take advantage of this nice up move in the next week or two. Okay, you see how the PET-D signaled that well in advance. Here's another example in Oracle. Okay, well, we have a nice upward move. How could we have known that in advance? Well, even though this is not a predictive tool, it's simply translating what the market wants to do. Once we apply the PET-D, we would have known well in advance back here after a series of green bars that it wanted to go higher. So it did go higher until right here. Now, what is the market telling us? Remember, we're only focusing on the source, what we're looking at, what we're trading. We're not concerned with some guy on TV. We're not concerned with the earnings. We're not concerned with what my mentors called noise. We're only listening to what the market's telling us. And right now, our translator, the PET-D, is translating that it wants to go lower. So what a tremendous edge, right? To actually know from the source of what we're trading what it wants to do. All our job is, as a trader, is to listen to the market, find out what it wants to do, and then jump on board in that direction. You know, there's nothing that we have to do other than that, just to be in sync. And as we can see, the market went straight down after that, okay? This is why most traders fail. They're out of sync with what you're trading. Once you're in sync, you greatly increase your odds for success. Let's look at a monthly chart of Zoom, the platform we're presenting on right now, okay? Now, this is monthly going back roughly a couple of years. As we can see, we had a really nice run up, kind of went sideways for a while, and then have been faltering ever since coming into this last month. Once we apply the PET-D, the same process applies. It doesn't matter whether we're looking at a 2-hour chart or a monthly chart, all right? If the bars are consecutively green, the PET-D is translating, it's okay, look for buy setups. But once it has consecutive red bars, the way we did right back here in September, October of last year, we knew that this stock wanted to go lower. Now, if you look here, when that was happening after 3 consecutive bars, where was the price? Roughly 260, 270? Look where it is now, okay? 100. You would have saved yourself a 170-point loss by simply applying the PET-D. So you can use this whether you're an investor, whether you're a day trader, regardless if you trade futures, currency pairs, doesn't make any difference. Okay, that was method number 1, okay? You see how that can tremendously help you. Here's another method now. Now, whereas the PET-D is really telling us the trend, you know, our goal is to find those really nice moves. But what happens when the market kind of goes sideways, right? That's when we run into trouble. And a lot of times the market goes sideways and we buy and it goes lower. We sell and it goes higher, right? These are called whipsaw markets. They're range markets. The market stays in a range and it really isn't giving us a lot of information. The PET-D doesn't work that well in those markets because it's basically going up, going down. And so you'll see maybe 2 red bars, 1 green, 2 or 3 more red bars, 2 green. It just goes back and forth, all right? But is there a method that can help us during those particular environments? Yes, this brings us to method number 2, which is strategy number 4. This was the first strategy that my mentors taught me some 4 decades ago. I still apply it to this day. So let me give you some highlights of this particular method. It's a pattern recognition strategy, right? So we're only looking for a specific pattern that generates itself all of the time in any market or time frame. Now, it was specifically designed for traders looking to identify momentum in advance. A lot of times you'll see a sideways market and you'll say, well, there's no momentum. That's the beauty of strategy number 4. It can pinpoint and highlight where momentum is just about to begin, and it'll tell you the direction even before you see it happen on the chart. Now remember, this is a pattern recognition strategy, so we're really not using a lot of indicators. In fact, there's only one indicator. That's the 50-period simple moving average. So we're basing all of this simply on looking at a pattern that repeats itself over and over and over again. So let's look at this example in SIGA. All right, once again, obviously, someone looking at this would say, gosh, there's no pattern. We're kind of just going sideways. This is an inexpensive stock, so I'm not going to get involved with this. We're in a range. We could do this for a couple of months, maybe even a couple of years, right? But if you apply strategy number 4 on our platform, just click on strategy number 4 in the drop-down menu, click on signal arrow. And you'll see in the midst of that range, there's actually a buy signal. It's telling you, because once again, everything is based on market behavior, not on earnings or interest rates or what's going on economically or what's going on in the world. It's only looking at market behavior. And just based off that pattern, it's telling you that looks like momentum is about to begin to the upside. Therefore, you should buy here. Now, most likely you'd say to yourself, there's absolutely no sign of momentum, but that's because we've been trained incorrectly. Conventional wisdom would say there's absolutely no momentum here, but actually there is according to this pattern. And then look what happened. You see what happened in the next 3 or 4 days? Now, I know a lot of you would say, well, Steve, that's only 5 points. That's really not a lot. But look at the price of the stock. If you look at the price of the stock in comparison, that's a 70% gain in just 4 days, a price gain of 70% in just 4 days. Imagine you were long Google. Imagine you were long Tesla, and it gained 70% of its price value in 4 days. Wouldn't you be happy with that? It's all relative. Here's another example, ROST. This looks like a range once again. It looks like it comes down here, bottoms, and then goes back up, but who knows what this is going to do, right? Well, click on strategy 4. Now, it doesn't mean that there's always going to be a signal, but let's just check to see if there was. Click on signal arrow in the drop-down menu of the platform. And yes, right here, it's telling us it wants to go lower. Well, how can that be? It looked like we hit the bottom here. So it's going to come down to this level and we'll buy it and it'll go back up. Well, not really, because look what happened. In 2 days, stock dropped 23 points. Now, obviously on this drop here, which happened a couple of weeks ago, 23-point drop, there was some news or something that came out, right? Because it gapped down and opened much lower on that day. The funny thing is that, remember, strategy number 4 is based off of a pattern. It does not take any news, any financial information into account. So how did we know to sell this? As I always say, the CEO of ROST, of Raw Stores, didn't call me up 2 days in advance and say, hey, why don't you generate a sell signal in ROST, our stock, because it's going to drop based off some news. And you're a nice little company, you'll help out your students. So why don't you tell them we're going to go lower. Remember, everything is based off a pattern. Everything you need to know is in the chart in front of you. That's the source. So why waste your time on what my mentors called useless noise, trying to figure out what the market's going to do? Here's another example, SMCI, okay? Obviously, we're in an uptrend, okay? It doesn't take the PET-D, it doesn't take anything else to tell us that we're going higher. But what happens many times is that it runs out of steam, and then we go into these sideways markets. This is where you're saying to yourself, boy, I thought this was going to take off. That guy in that trading room told me to buy it. And for the last week or two, I've been doing nothing. I'm losing now. I think I'm going to sell. okay? This is the way most traders trade based on what someone is telling them to do, and this is why most traders fail. If you simply waited for a strategy 4 signal, you could have seen that where most traders were saying nothing is absolutely happening, right here, the very first trading day of May, it was generating a buy signal, okay? And look what happened in 2 days. Jumped up 15 points. Not a bad little trade, 15 points in 2 days, right? As we look at Boeing, okay? Same thing here. We kind of look like we're in a range, right? We come down to the bottom. If you buy there, come back at the top, sell. Now we're getting close to the bottom again. Time to buy, right? That's the way you trade these whipsaw markets. But if we add strategy number 4 in this range market, we're not going to buy somewhere down here. We're going to be selling because the entire time we've been going in this range, it's been generating a cluster of sell signals. These are high probability setups. When you get a number of these together, the market is not just telling you it wants to go in lower, it's screaming that it wants to go lower. And look what happened to Boeing coming into May last month. It fell 65 points. Here's the good news. If you missed all these signals here, when we came down and where most people said, hey, we're going sideways, looks like we're bottoming. Here's a reversal little doji right there, and we're going higher. You could have gotten in again and sold as it went lower. Let's look at Costco again, another chart. Here's a different time frame. This is going back to April or prior to April. Sure, we had a really nice run, but for the last week or two, we've been going sideways. This is where most traders feel very frustrated. They don't know if they should be in the position or not. All you have to do is simply wait for a strategy 4 signal. In this case, it said momentum is about to return, so it generated a buy signal and 55 points in the next 2 weeks. Now, for all you traders who like to trade currency pairs, I just want to let you know, this is not just a stock strategy. Even though when we first started teaching this years ago, we were gearing it mainly towards stock trading because that's the way I was taught this method. But after years of teaching students who trade multiple markets, they've told us that it works just as well in currency pairs and in futures and even cryptos. So here we have 2 sell signals in the euro dollar just a month or 2 ago, and the euro dollar fell nearly 700 pips coming into May last month. All right, so that was method number 2, strategy number 4. I still use it to this day. It's a great strategy. I've been applying it for over 4 decades. But remember, it's designed to capture momentum. So we're looking for something before it takes off. What happens when the market has already taken off, either to the upside or to the downside, right? What happens if the bars are already green or they're already red? We want a strategy that's perfect for that. That's called a method that is a continuation strategy that can actually generate signals when the market's going higher to buy. A lot of traders don't like to trade that way. They say, well, gosh, it's already up too high. How can I buy here? The beauty of this method is that we'll tell you if there's still a little bit more room left to the upside if you're buying, or more room to the downside if you're selling. Method number 3 is what we call strategy number 5, okay? Some of the highlights of strategy number 5 is that it's a non-traditional candlestick method for all candle patterns. So we're not basing it on the way all of us were usually taught how to trade candle patterns. This is a non-traditional way. It's mainly for continuation traders. These are traders, like I said, who don't mind buying at the very high. I know it's very difficult for some traders, myself included. If something has gone up 10 or 20 points and you say to yourself, well, I can't buy it here. Oftentimes at the very high, strategy number 5 will be generating a buy signal. Same thing works to the downside. Now, once again, this is based off candle patterns. And it only uses one indicator as well, just like strategy number 4, it only uses the 50-period simple moving average. So here's an example now in HP, okay? Now, as we can see, we've been going higher for the last week or 2. Most traders would say, I can't buy it. Look, we're at the highs here. How can I buy this? I want to look for an overbought indicator to tell me to go short. But once again, if we click on strategy 5 on our platform, in the drop-down menu, it's as easy as clicking on signal arrows, and it automatically identifies the signals that was generated. And there's one right there at the very high. Had you taken that, well, look what happened. 17 points in the next couple of months to the upside. And if you missed that, look what happened here. We kind of had a little pullback, but then we started to have a continual up move. 2 more buy signals were generated as it was going higher. Here's an example in Snap, okay, Snapchat. As we can see, we're in a downtrend, okay? This thing is going lower. It's trading lower every day, closes lower. We only have one up day, and then it's right back down. So we're saying to ourselves, you know what, we're kind of making a little ledge here. I think I'm going to take a shot and buy some calls. Maybe it's going to bounce, but strategy number 5 has different ideas because it says we are going lower. How can you sell after it's gone? I wish I would have sold up here. Well, unfortunately, it hasn't given you a sell signal there, but right here. Now, had you decided to take it, look at the nice move you would have had to the downside, okay? Roughly about 10 points. Now, look what happened after that. A gap to the downside, okay? So this is why we don't trade candlesticks in the traditional way. The traditional way is as a reversal type of pattern. We're looking at them entirely different and going with the flow. We could have potentially captured 20 points in Snap this past month or two. Let's look at PSA, all right? Once again, the same pattern. It's going up higher towards the high of its nice uptrend here. Most traders would say, well, I'm getting out. Nice profit, thank you very much. But strategy number 5, once again, generated a buy signal at the highs here. Stock went up 50 points coming into May. Now, looking back in hindsight at DraftKings, all right, most traders would say, gosh, I missed this. I've been long the whole time. In fact, that chat room I go to told me numerous times to buy, all right? They said, okay, we've come down. Here's a nice little support here. Let's buy here. And look what happened. It went lower. They said, well, don't worry. This is really the support right here. We're tremendously oversold. Here's where you got to buy it. And it went lower and continually lower and lower. Once again, why most traders fail, because you're trusting in conventional things that really show no level of consistency. Remember, I said earlier, our job as a trader is really simple. It's twofold: to find out what the market wants to do, and obviously they want it to go lower here, and then jump on board. Our job is not trying to figure out what the earnings estimates are going to be, or our job is not trying to figure out, where support is. Our job is simply to be in sync with whatever market or time frame you're trading. Trading is a lot easier that way, okay? So looking back in hindsight, how could strategy number 5 have helped us to take advantage of this? Well, click it on our platform and look at all the signals that were generated. Had you taken the first couple of ones up here, you could have potentially captured up to 40 points coming into May last month. Same thing can be applied to a currency pair, the dollar yen, okay? Now this is a daily chart. It's been going straight up coming into last month. How could we have taken advantage? The exact same principle apply. Doesn't matter what market or time frame. Buy signals were generated all the way up. Over 800 pips you could have captured in roughly about a month. That's roughly over $8,000 potentially per unit you could have captured. And then lastly, any crypto traders out there? Now, I know a lot of people don't like to short crypto, but let's say you were long, okay? Well, you could have used this as an exiting tool, and you could have gotten out right here and saved yourself a good 12,000 points to the downside in crypto, okay? And if you're more adventurous and you wanted to short it, well, potentially could have captured 12,000 points. So there's numbers of ways to use these methods and techniques, either to exit a position altogether or to initiate a new one. Okay, so let's recap these 3 methods that we talked about. The first one is the PET-D, okay? This is one of the most powerful tools we have at specialist trading. It simply is a translator, okay? It doesn't predict how high or how low something will go. It simply translates on a tick-by-tick basis what any market, what any time frame wants to do. And what a tremendous edge, because it's telling you what the market wants to do. I mean, usually we're focused on listening to some guy on TV tell us what he thinks the market's going to do, or some guy in a chat room, or some indicator. Here, the translator is telling you either you have consecutive green bars or consecutive red bars. Now, you need a strategy to trade, strategy number 4. Now, this is mainly a great strategy for those kind of non-directional markets, no direction at all right? Because it has an uncanny ability to identify stocks that are getting ready to move. They're getting ready to have some momentum, either to the upside or to the downside. This is a great method. I've been applying it for over 4 decades and continue to. And this was one of the first methods that my mentors taught me. Then what about those markets that have already taken off? You feel like, gosh, I missed it. Well, strategy number 5 is perfect for that. A non-traditional candlestick method that is meant to trade continuation trades, continuation signals. So if the trend is up, don't worry, you feel you missed it. Strategy number 5 is designed to continue to generate signals along the upside as well as the downside, okay? Now, when we combine all 3 of these methods that I just went over, we get what we call at Specialist Trading a triple threat of trading, because they really are a triple threat. You have all the bases covered. You can find out, excuse me, what the market wants to do. You can trade a directionless market where it's going sideways, a whipsaw market, or you can trade a straight up or a straight down market. These are three great edges to have that will really take your trading to the next level. Strategy number 4, number 5, along with the PET-D. So ask yourself, do you think these three methods, any one of them, could have helped your trading this past year? I think most of you would answer a resounding yes. So because of that, we have a special offer for all the people attending today. We're going to offer you our triple threat special. Once again, that's strategy 4, strategy 5, along with the PET-D. You're going to get instant course access, detailed instruction. You'll get the entire course rules. With the strategies, you'll learn all the different entry points, different exit points, and different stop placements. Included with the strategies, you'll have a way to trade them conservative as well as aggressively. So different versions to fit your style. Along with the PET-D, you'll get 4 trading techniques. So the PET-D is not just only used as a trend identifier. You can also apply different ways to trade it on its own, okay? This includes the add-ons if you like to use it on any of the major platforms like TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, Thinkorswim. And this is a great, great offer to have all of this included, but we're going to kick it up a level. We're going to throw in an extra bonus, all right? What we'd like to do on top of giving you our triple threat is that we'd like to throw in a full 12 months of the platform. Now, 12 months or a full year of our platform usually runs about $1,200. So we have a great discount today. For all the people in attendance, we're going to throw in a full year of the platform absolutely free. 12 months use where everything is one click away. So you don't have to worry about figuring out how to upload the PET-D or strategies onto your current platform. You can have a separate platform, just toggle and open up a new window and look at the PET-D while you're wondering to figure out if I'm going to buy or sell, okay? Now, let me tell you about some of the things that are offered. Not only are you going to get strategy 4, strategy 5, along with a PET-D, you'll get a host of different things that I've accumulated in over 4 decades, such as our proprietary buy-sell line, such as our strength of trend tool, roughly dozens of things that I've taken in my 45 years of trading that you won't find anywhere else, most of them taken from the trading floor that are on our platform. But here are 2 of what I feel are the best things on our platform. These are worth their weight in gold, and that is the strategy signal scanner, along with auto-generated exit levels. Now, the signal scanner you can apply to the PET-D. You can scan every night to see which stocks in any market, any time frame, are green or red. And this will really help you with your trading. You can also scan for strategy number 4 or 5 buy and sell signals on a nightly basis. Now, the auto-generated exit levels are just one of our different exiting methods that are one click away on our platform. So let me show you how this works. Let's say you were scanning for signals, all right? Just you were interested in strategy 4, strategy 5 signals. You scanned and you saw that JKS right here has a buy signal. Now, this was on the 13th of last month. So you would have said to yourself, okay, maybe I'll take that, but I'm not really sure where to exit, all right? With a double click on the arrow on our platform, it automatically generates these exit levels, okay? Now, if you're the type of trader that likes to get in and out quickly, you would exit at either 1 or 2, okay? First level or second level. If you'd like to stay in a little bit longer or a swing trader, you'd exit here. And if you'd like to get the most bang for your buck, you'd exit at the 4th and final level. So let's say you decided the 4th and final level and you placed a limit to exit right here and you entered the trade. You're all excited and look what happens. In about 2 weeks, you would have exited with a nice 12-point gain. You see how simple that is? It's all one click away on the platform. The entry points, the exit points, as well as stop placement too. And if you wanted to apply the PET-D, this could have reassured you to stay in the trade, because once you got in the trade, look what happened. 1, 2, 3. Now, once you're in the trade, even though you hadn't exited and come up to any of these levels, it was telling you that most likely an uptrend is going to take place. It would have given you the added assurance to knowing you were in sync with the trend. Here's another example. Let's say you wanted to scan for stocks that are either green or red in the PET-D. All right, so you scanned the QQQ, that's the ETF that represents the NASDAQ index, okay? And you see that, well, the NASDAQ obviously has been in the red. It's been in the red for some while. Right here, it gave you a warning back in April that it wanted to go lower, and the market, as we all know, did go much lower. Now, since the market's going lower, are you going to be a buyer? Obviously not. Remember, our job as traders is to find out what the market wants to do and then jump on board. So the market wants to go lower because the bars are red. So we want to jump on board with a sell signal, with a strategy 4, strategy 5 sell signal. Now we could actually short the stock. Maybe we could buy the puts, maybe some type of spread with a negative bias. But either way, we had a signal generating, a sell signal being generated right here, okay? With one double click on the red arrow, we see now the exit levels right here. If you wanted to get out quickly, you'd use the first two. If you want to stay a little longer, use the last two. Let's say we decided the market was really going to go lower, so we placed a limit to buy here. Or if we were, let's say, long the puts to go short the QQQs, we knew that if we traded right here, that's where we're exiting. And look what happened. Well, we've all seen the market go lower. And just a couple of weeks ago, we hit that fourth and final level. This is where we tell students, especially our beginning students, that they should be out of the trade entirely, because most likely that's where the trend changes. And then look what happened in the last couple of weeks. We've gone higher, okay? So you could have captured very near the lows of the sell-off that just recently happened and captured upwards of 52 points in the QQQs, which we all know represented thousands of points in the Dow, okay? This is all one click away on our platform, which comes with our special offer. So let's break this down, okay? We're going to throw in strategy number 4, strategy 5, along with the PET-D. Now, strategy number 4, if we bought this separately, would cost us close to $700. Same thing with strategy number 5. And the PET-D, if we purchase that separately, would be $49.95. So altogether, without this deal, it would cost you over close to $6,400, which is a lot of money. We understand that, okay? Now, we're not including the full year of the platform. So if we include that price, we're also looking at over $7,500. That's a lot of money, and we are in no way going to charge you that with this special offer. So here's what we're going to do. We're not charging you at all for strategy 4 or strategy 5. We're throwing in a full year free of the platform, and the only thing we're going to charge is for the PET-D. That's $49.95. You're going to save over $2,500. Now, we still understand that that's a little bit difficult for some traders to come up with in one lump sum. So we're also, for a limited time, going to make payment plans available. That means you do not have to come up with $49.95. You can be up and running as early as today or tomorrow. All you have to do is contact Pro Trader Strategies and put down a small deposit, and they'd be happy to take your order and set you up and have all of this information being sent over to you. And just for a small deposit, you can still be up and running and be a member of the Triple Threat courses. Are you going to wait another year to become a consistent trader? I know many of you are struggling. That's okay. Take charge of your trading, okay? Learn how to listen to the market, learn how to trade in sync with the market with the Triple Threat. That's why we call it the Triple Threat, because it works so well and it's very simple once you understand the process, and I'll be there with you every step of the way. Here's how to take advantage of this great offer, okay? Contact Pro Trader Strategies. They're in charge of all the discounts, all the setting up, all the tech support. I would recommend calling them directly at area code 310-598-6677. They have trading consultants working the phones right now. They'd be more than happy to either give you some information or to take your order over the phone or to establish a payment plan. A lot of traders just like to get a quote on a payment plan. That's perfectly fine. Give them a call. There's absolutely no obligation. They would be more than happy to give you a quote, okay? Now, you see this link at the very bottom here. If you'd like to go up to get more information and like to pull up an information page, you have to copy that and paste it onto your browser. But we've just posted a live link in the chat box. So if you'd like to go to the chat box on your far right-hand corner there, just click that on and it will have the link right there, a live link. You can click that on and it'll give you all the information, okay? I promised I would answer any questions. So if you do have any questions, please, now's the time, go to your chat box and I will answer them to the best of my ability, okay? Someone's asking, can this work on futures? Yes, it can. I'm sorry, we didn't have any futures examples, but I trade the E-mini futures, and I use, this morning I was using the PET-D, and you should have seen when we had that initial sell-off, how the PET-D worked amazingly on being able to identify that we wanted to go lower before most people knew we were going to have a sell-off. And so this really works well intraday, as well as on daily or weekly bars of the futures. Doesn't matter what futures, if you're looking at NASDAQ futures, E-mini futures, you can still apply it. In fact, the PET-D or the strategies 4 or 5 can be applied once again to any market and any time frame. So I don't want you to get caught up and thinking that, well, it only works on stocks. Makes no difference what market, wherever there's a pattern being generated, which is the basis for these two strategies, you will see signals. Doesn't matter what market or time frame. And wherever there is a trend being generated, you will see that with the PET-D. So that's why it's the beauty of all these methods. That's why we call it the triple threat, because we have all your bases covered. Sideways markets, trending markets, straight up, straight down markets, signals and continuation. So it's really, really a great offer, and you'll be able to cover all your bases with the triple threat, okay? Here's the most common question I get. What do you mean by educational process, the continuous education? That means, it doesn't mean that we're going to have classes. What that means is that you will get my personal email address, and you can contact me whenever you'd like. So this is the educational process where if you have a question, it's not like you're calling up an intern or you're calling up a salesperson. You can call, I should say emailing a salesperson. You can email me directly, and I will answer any question you have concerning any one of the triple threats, the PET-D, strategy 4, strategy 5. Okay, I answer questions all the time. I try to get back to you as soon as possible. Sometimes it takes me a couple of days. Most likely, I can answer your question that same day. But so you get continuous education from me as long as you're a student of mine. There's no time limit of 30 days free access on the email. No, you can email me a year. I have students email me years after they became students, and they still have questions. So this is something that you will get that's already within the price of the triple threat deal. Okay. Any more questions concerning anything? Well, I see not. If there are no further questions, I just want to thank you for taking time out of your Wednesday. I hope you learned something. Remember, as I leave you with this is the main process that you have to really grasp. It was difficult for me when I was starting out, but my mentors kind of pressed it into me. And now I see it as really being extremely simple, as opposed, things were more complicated than they are now. But the only thing as traders that we have to do are two things. The first thing is to listen to the market. Remember, we're all trained to do the opposite. We're trained to listen to someone on TV, or listen to someone in a blog, or listen to someone in a chat room. We're trained to do that, but trust me, 90% of all traders fail. So obviously that really doesn't work. Learn to listen to the market. And once you do, then simply jump on board. Trade in that direction. You will have a high probability of success because you will be in sync with the market. The good news is that that philosophy, that concept is instilled in the triple threat, finding what the market wants to do and jumping on board. So take advantage of this great offer. As I take one last snapshot here of our disclaimer, I just want to thank you all for taking time out of your Wednesday. I wish you the best of luck in trading, but most especially, I look forward to seeing you in class in the triple threat course. Thank you so much. Have a great day and a great week, and I'll see you next time. Bye-bye.